Yesterday, LayerZero just dropped the biggest announcement in crypto this month. A massive player is backing their next move. And they're not alone. Other massive names are jumping on board as well. The token pumped 25% in hours, breaking past $2 for the first time in weeks. But there's also a massive unlock in 9 days that could dump the price hard. So what's actually going to happen? Let me break down what Zero actually is, why Wall Street is suddenly flooding into LayerZero, and the exact levels you need to watch before this thing either explodes or collapses. LayerZero is the leading cross-chain messaging protocol in crypto. Think of blockchains like countries that don't speak the same language. Ethereum can't natively talk to Solana. Arbitrum can't communicate with Avalanche. LayerZero solves this by creating a universal translator for all blockchains. The protocol uses something called ultra-light nodes and configurable security through what they call DVNs, decentralized verification networks. Without getting too technical, this lets you send messages, tokens, or data from any chain to any other chain securely without relying on a single trusted bridge operator. It's permissionless and trustless. The real power is in their standards. They created OFT, Omni-Chain Fungible Tokens, which means you can have a single token that exists natively across multiple chains at once. Not wrapped versions, not bridge copies, the same token with unified supply. Same thing for NFTs with their ONFT standard. This infrastructure powers Stargate, which is one of the biggest cross-chain DEXs in DeFi. Billions of dollars flow through LayerZero's rails every month. Over 80 different blockchains are integrated. It's become critical infrastructure for the multi-chain world we live in. The Zero token is used for governance, paying message fees, and staking to secure the network. Holders vote on protocol upgrades every 6 months through on-chain referendums. Total supply is capped at 1 billion, with only about 200 to 250 million circulating right now. That low float is important because it magnifies price movements both ways. But here's where things get insane. Yesterday, February 10th, LayerZero Labs announced Zero, a completely new Layer 1 blockchain designed specifically for institutional finance. This isn't an upgrade to LayerZero. This is a separate blockchain built to handle stock trading, clearing, and settlement for Wall Street. Zero is targeting millions of transactions per second with near zero fees. It's a sharded blockchain with what they call zones. Think of them like specialized sections of a city. One zone handles general smart contracts, another handles privacy-focused payments, and a third handles high-frequency trading infrastructure. The initial partners are absolutely stacked. Citadel Securities made a strategic investment in ZRO tokens as part of this. Citadel is one of the most powerful trading firms on the planet. They're not buying crypto tokens for fun, they're building on this. The DTCC, which settles basically every stock trade in America, is involved. Intercontinental Exchange, which owns the New York Stock Exchange, is involved. ARK Invest, Cathie Wood's firm, is backing it. Google Cloud is providing infrastructure. This is traditional finance going all in on crypto infrastructure, not just dipping their toes, actually building mission-critical systems on a blockchain launching in fall 2026. What makes Zero different from LayerZero is that it's backward compatible. All the apps and integrations built on LayerZero can plug into Zero without rewriting code. Stargate can use it, every Omni-Chain app can use it, but now they can also tap into institutional liquidity and regulatory-compliant infrastructure. The timing is perfect, too. LayerZero just executed a 50 million ZRO buyback, reducing supply. They're maturing toward protocol fee activation where holders might earn revenue. And now they have Wall Street validation that this technology is ready for trillion-dollar markets. OKX is genuinely one of the more solid exchanges out there. Good security, deep liquidity, and it doesn't randomly fall apart when markets get crazy. It's consistently ranked near the top, fees are competitive, and withdrawals actually work when you need them. Plus, there's up to 100 euros for signing up and up to 200 euros for referrals. So you're literally getting paid to try it. No gimmicks, just a platform that does its job. Check the link in the description to grab those bonuses and more. Back to the video. Let's talk numbers. Current price is around $2.50, up around 50% from yesterday before the announcement. All-time high was $7.47 back in late 2024, so we're still down about 70% from the top. Market cap is sitting between 480 and 520 million, depending on circulating supply estimates. Short term, this rally looks overbought. RSI is above 70, volume spiked to 300 to 500 million in 24 hours. And we have that February 20th unlock coming, 25.71 million zero hitting the market. That's over 10% of the current float. If early investors dump, we could easily retest $1.80 to $2 support. But if the zero hype sustains and buyers absorb the unlock, we might consolidate here. Medium term through 2026. Analyst targets jumped after the announcement. Pre-zero, forecasts were conservative. Now, analysts are calling $2.50 to $6.13, with an average around $3.50 to $4. That's 50 to 80% upside from here. The bull case depends on execution. Zero needs to launch in fall to 2026 without delays. Citadel and the DTCC need to actually build on it, not just issue press releases. And LayerZero needs to activate protocol fees so Zero becomes a revenue-generating asset. Long-term by 2030, forecasts range from $5 to $26. The optimistic models assume LayerZero becomes the backbone for both crypto interoperability and institutional finance. If that happens, $10 to $15 isn't unrealistic. But that's a lot of ifs. Now the risks, because there are massive ones. First, the February 20th unlock. 25.71 million zero is unlocking in 9 days. That's not the last one either. There are ongoing cliffs throughout 2026. If whales sell into this rally, the price tanks regardless of fundamentals. You need to watch unlock calendars religiously. Second, execution risk on Zero. Building a blockchain that can handle millions of TPS for institutional trading is insanely hard. If Zero launches late, launches buggy, or doesn't attract the promised partners to actually use it, this entire narrative collapses. Remember, fall 2026 is 9 months away. A lot can go wrong. Third, regulatory scrutiny. Zero is explicitly targeting regulated financial markets, stock trading, clearing, settlement. That means oversight from the SEC, potentially banking regulators, basically a lot of potential bumps in the road. One adverse ruling could kill the project before it launches. The fact that the DTCC is involved helps, but it's not a guarantee. LayerZero just went from a solid interoperability play to potentially the bridge between Wall Street and crypto. The Zero announcement with Citadel backing is genuinely historic. This isn't a meme coin or a speculative DeFi protocol. This is infrastructure that could power stock markets. But don't let hype cloud your judgment. The unlock on February 20th is real. Execution risk is massive. And the token is already up 40% in a day. Chasing here could mean buying the top. If you're looking to enter, I'd wait for either a dip back to $1.80 to $2 or a confirmed breakout above $2.50 with the unlock absorbed. If you're already holding, consider taking some profits here and letting the rest ride toward Zero's launch. If this breakdown helped, smash that like and subscribe for more deep dives. Check the link below, and I'll see you in the next one.